Alright everyone, welcome back to the channel. Cowboy Trades here. Let's talk about the stock market blues. It's been a little while since we've done this. This is just going to give you a nice overview of everything that's happening in the stock market right now, from the past fractals to what's happening in the day-to-day action. Jumping right in, starting off on the DXY on the daily time frame. As you can see, following yesterday's FOMC meeting, we have made not only new 20-year highs yesterday, but new 20-year highs today. The DXY is really on a parabolic tear, and while on the daily time frame, technically it's down a very small amount, what you can see is coming over to the 4-hourly time frame, we've beautifully retested these EMA ribbons, and in my opinion, I think in the next couple of hours, well, not the next couple of hours, the next 12 hours, 24 hours, we're going to be shooting up to new 20-year highs. One final thing about the DXY is we've hit my first macro price target. If you're a seasoned veteran of the channel, welcome back. You would have heard me mention 3 very specific price targets: 111, 112, and we've also been looking at this 3.618 Fibonacci up here, round about 115. I haven't talked too much about 115. I mentioned it in about 1 or 2 videos a month ago, but this is going to be a level that we're going to start eyeballing up for next moves. You can also see there is a bear flag breakout of a price target up here at 113.8. So from where we're at right now, we've already come up and we've tagged this 2.618. We've already come up and tagged the psychological level of the 111. There was also a 1.618 fib somewhere around about here. I'm pretty sure it was from this massive cup and handle, but nonetheless, we're already at this level. The next target to the upside, in my opinion, obviously that 112 is going to be a psychological level, but I think as we approach that 112, there's going to be more confidence coming into the DXY because we just keep on pushing up to these 20-year highs. I don't think we're going to spend a lot of time at 112, even though it's a big psychological level. I've got my eyes on 113.8 from now. That is about another 2.67 move to the upside. Now, while we're still talking about the day-to-day action, let's update the SPX. Now, we've come down and also filled one of my first price targets. As you can see, I've color-coded these, so you can see these green boxes down here are where support is. The red boxes are where these price gaps are. Now, you can see on the daily time frame, price gap here, and I've been saying, in my opinion, I think we're coming down to fill these, but I've obviously got my target right down here, the bottom of the support box. Just wanted to give you a quick update, letting you know we have filled the first price gap. The next price gap is going to be filled in another 2.4% move to the downside for the SPX, so that is definitely going to be brutal for obviously the stock market. That's going to be bullish for the dollar, and hence it's going to be bearish for crypto, Bitcoin, etc. Take your pick. But you can see, since we've started talking about these and talking about my price targets down here and these price gaps, the SPX has come down about 2.7%. So great to see these price targets are getting hit. Not too much to update in the E-mini futures. Obviously, these are open ahead of the SPX. They are trading around about 3,800 right now. So obviously, I do expect a slight buyback on the daily time frame, probably a quick wick up before inevitably we make a lower high and then come down to make lower lows. This is how we always do. We don't go down in a straight line. As you can see, we go down, have these brutal capitulations, bounce for a day, new lows, bounce for a day, new lows, bounce for a day, new lows. This keeps on happening. So moving on from the SPX, let's talk about the Dow Jones Fractal, the SPX Fractals. Let's talk about a few of these fractals. So starting off with the Dow Jones one, we haven't looked at this too much, but this is very similar to the SPX. Once again, calling for a bottom round about this 10th of October level. As you can see, this fractal has been beautifully lined up, and it's following pretty much the exact same as the SPX. So I won't comment on these too much. We've talked about these many times on this channel. Just giving you a quick update so you can see this beautiful bit of eye candy. Continuation is the name of the game. This is why in the past couple of videos and over on Twitter, I've personally been predicting new lows come for the stock market and Bitcoin before the 10th of October. Moving on to the VIX. The VIX is slightly different now. The volatility is going to be moving up into round about early November. So the VIX is basically saying, hey, I do expect more bearish continuation to follow suit. So while the SPX is saying we're probably going to make new lows around about the 10th, the VIX is saying the volatility is going to be continuing to move up, and subsequently it's likely that we see the tech stocks like the Nasdaq and then obviously highly correlated Bitcoin, we start to see these follow back down afterwards. Now, also, our next FOMC is about 41 days away. I do think this is going to go down, but apparently Chicago Mercantile Exchange is currently predicting a 68.5% likelihood of a 100 basis point increase. That sounds pretty brutal. In my opinion, I think Jerome Powell was going to bring out old reliable the 75 basis points, as he does basically every single time now. Now, wrapping up the video, the last chart that I want to look at today is this 2008 Nasdaq fractal. Now, we've been saying how you should definitely not be looking at this to predict day-to-day, week-to-week volatility. We're just kind of looking at this and seeing the similarities between the recession of 2008 for the tech stocks and how it's looking now. Now, what I did notice is something very interesting. If you offset the peak, so we basically previously retroactively fit these tops, but what we're doing now is we're moving this 12 weeks to the left side, and as you can see, we've retroactively fit this low instead. Now, what you can see is when we retroactively fit this low, so we're not considering this data point because we've literally put it there ourselves, this peak was very, very closely lined up. This peak with the top was beautifully lined up, like literally on the week. Then you can see this beautiful breakdown while the lows, instead it had a bounce here, it didn't really happen over here. You can see the lows were beautifully cooled. We had that rally, the peaks were beautifully cooled, the lows were beautifully cooled around here. We had that bounce, and once again, it's a few weeks off, so there's definitely a ton of similarities with the Nasdaq fractal. This is lining up quite nicely, and I think, as you can see, when we actually do line this up, this is interesting. This would be predicting for new lows to be around about the 10th of October. Like I said, if you're going to take any of these charts with a grain of salt, it should be this Nasdaq fractal. Once again, I'm really not saying that these are super highly correlated. We're just looking at the general market structure for the Nasdaq. I'm much more interested in tracking the week-to-week volatility in things like the SPX, the Dow Jones Fractal, the VIX, which we've been doing on this channel. So just a quick update on the Nasdaq, but once again, the VIX Fractal, Dow Jones, the SPX, these are the bread and butter. This is really what I continually see playing out. At some point, these charts are going to deviate. This is not going to track forever. I'm not saying that we should just expect this exact bear market to take place. It's not going to be that easy. It's not just going to do the exact same thing. It might, but that would probably not happen in my opinion. So at some point these are going to deviate, but nonetheless, for right now they're tracking, so I'm going to continue to update you on these whenever I see anything worth talking about. It's all I've got for the stock market blues, my friends. As always, Cowboy out. Peace.